We have now come to the Q&A segment of the session. I'd like to invite the panelists to join us up front. Yeah. So the moderator for the segment is Ms. Yao Hui Ching. Partner and Deputy Professional Practice Director of Ernst & Young. Ms. Yao is also the chairperson of the SCA Auditing and Assurance Standards Committee and the AGS1 subcommittee. The second panelist, Ms. Angela Liao, whom you have already met. The third panelist, Ms. Alima Banu, is the Director, Assurance, Risk and Quality of PwC Singapore. And last but not least, Ms. Chan Yen San, Partner and Head of Professional Practice of KPMG in Singapore. If you would like to ask the question in person, you can raise your hand and we'll pass the mic over to you. Otherwise, you can also scan the QR code on the screen to access the online platform to post your questions, or use the link pigeonhole.at and enter the passcode PS001 to submit your questions. You can also upvote the questions that other participants have submitted. I'll just leave the screen, the QR code on the screen so that the participants can scan and access the portal. Okay, I'll hand over the session now to Hui Ching.
Good morning, everyone. So in this session, we're looking at the Q&A session. Can you all hear me? I thought my voice is not enough. Yeah. Okay. Good morning, everyone. So in this session, we are going to share some of the common questions that you may face with regards to some of the reports that auditors issued. Actually, as the speakers were going through the session, I already see quite a lot of questions that's been posted. We originally have some granted questions because we thought that you all may not be asking questions, but there's quite a number of questions. We'll try to answer all the questions that you all pose. And I think some of it is really a sharing session. We also wanted to understand, from your perspective, what are the things that you want to clarify. And a lot of us here, we are all practitioners, we are auditors, that when we receive engagements from the grantees, there are certain considerations. We also, we can share what were our considerations as well. So I thank you, Angela, Halima, and Yensan for joining this panel discussion. I'm not sure whether you are able to see the screen or in terms of the questions, but I think I'll just go through the list, right? I'm not going to go through the planted questions because since the questions in this is probably the questions that you want to ask, and I wanted to make sure that I answer all the questions. Right. So the first questions that I have here is, what are the common difficulties or issues encountered by accounting professionals when carrying out the procedures for government grant engagements? For example, is it unclear criteria, or is it unable to obtain evidence? Right? Maybe I can start first, then I will just I'll let some of the panelists share some of the comments. I think a lot of times that currently the ones that I'm looking at is actually a lot of EDB AUP engagements. And I think for the EDB AUP engagements, because it's also because there are quite a number of grants under EDB. And I think and these are some of the common reports that we issued. So I think we have discussed that in AGS1 subcommittee. So from that perspective, I think in terms of the criteria as well as how evidence is going to be obtained in terms of the nature, extent, right, and as well as the timing, I think that's probably quite the steps are actually quite well defined, right? So I think a lot of but some of the if you are doing a new grant, right? For example, as what the speakers have shared, if some in the AUP engagements, right, you will need to make sure that it's quite specific, because we are issuing a factual findings report, limited assurance or reasonable assurance engagements. So I think that that's some of the things that we do encounter when we receive requests from our grantees on what are the reports that they want us to issue. Yeah, so maybe I will just hand over to any of the panelists here who wants to also share.
Okay. Hello. Okay. Maybe just to add on, I think I did briefly touch on it in my presentation earlier as well. I think generally, based on what we have encountered, it's not so much of executing the procedures. I think most of the time for an AUP or even for assurance, right, I think we generally would be able to design the appropriate procedures and execute. But the difficulties that we do face sometimes is more of the reporting and what goes into the report itself, because we do have situations, for example, where certain phrases or language which the grantors may want to use or reflect in the AUP report could, connotate some form of assurance, like what Eileen has covered, and that is clearly prohibited in our standard. And so sometimes we do get into quite a bit of discussions with the grantors and trying to get them to appreciate why we might not be able to put in certain phrases that they are looking at. So I would think that more from a reporting angle, that sometimes we need to come to that understanding. Yeah.
Hi, good morning, everyone. So I would actually echo similar considerations as well. What I might add, though, is upon the the beginning of the engagement, the very start, right? So reporting comes as a natural consequence of the procedures that we perform, right? So when the procedures are not clear, when the terminology used in the procedures are not clear, it makes it difficult to sort of understand what gets into the report. Right? So when judgment needs to be exercised, it's left to the auditor to decide, right, what would seem appropriate in those circumstances, right? Then that would not constitute, right, an AUP procedure. It would, because it's not been agreed upon, right, regarding nature, extent, timing, etc. So our challenges, some of the challenges have actually been having to engage with our clients who are the grant recipients to further engage with the grantors to help clarify those procedures. And that's a very, very important aspect because that forms the foundation of our engagement contract with our clients who are the grant recipients, right? So when that part is actually crossed, that becomes a natural consequence to be able to provide the report. In other situations, we found, grant providers adapting maybe other agencies' terms, right? Perhaps not yet suitably tailored for the particular grant that is being provided by the particular government agency. When that happens, right, and along the way, in the course of executing the procedures, practitioners might find it challenging to appropriately execute those procedures because not suited for the circumstance or that particular grant. So that is something to also bear in mind. I think, when you receive the report, you would also want to be able to more easily understand the findings that are being reported so that you can utilize it for your purposes. So perhaps that might be the sort of couple of points that I might want to add to that question. Yes.
So maybe I'll come from a more different angle. We have the, auditors' challenges. We also have challenges, dealing with the grantee, right? So the quality of the information that the grantee can provide, the information that we get, and the quality of our assurance will also depends on the quality of the information that the grantee can provide, the processes that they have in place. So again, from the grant management perspective, because you come from the agencies, sometimes you'll be thinking about, what kind of report or assurance or, what kind of report you want to get from the grantee, right? And that will have to be tailored to what the grantee has in place. For example, if you are looking at assurance, but the grantee doesn't even have proper internal controls in place, that will place a lot of difficulties, of course, on the practitioner because basically we can't get any evidence because the grantee doesn't have controls, proper controls in place, then perhaps going straight into wanting an external assurance over their internal control may not be too appropriate at that point in time. So you may need to scale back in terms of a more phased approach in terms of reaching there. So what is it that is the first phase that this grantee needs to have in place? Of course, there are challenges from the perspective of the grantee as well as the grantor, because some of the grants that are being provided is of a small amount. And small amount means that the organization is small. And if an organization is small and if the grantor imposed a significant internal control to be put in place, the cost of doing that may be more than the grant that they are going to get. So that there needs to be a tailored approach in terms of looking at the quantum of the grant, what practically the grantee needs to have in place in order to satisfy the accountability part, right? Because there's an accountability part that we need to deal with, and then we decide what are the kind of engagement that needs to be put in place, and that will of course ease the process. So in terms of agreed upon procedure, right? It is more direct, I would say, right? Because you dictate as a grantor what exactly you want the grantee to produce in terms of evidence. Like for example, if it is, I don't know what kind of grant that you want to talk about. EDB grant is quite common. I think EDB grant we have a long history of dealing with EDB grant. There's also other grant out there now, like MSF has a lot of grants, MCC, so, each of the agency has a lot of grant out there. So when you have a grant that's granted to the grantee for agreed upon procedure, you can be very specific in terms of what exactly you want the grantee to produce. And you can tell the grantee upfront, these are the things that we want you to produce to support the amount of grant. Then as an external assurance provider, right, for us, once it is clear, you tell us these are the ABCD things you want to see, we will do the ABCD things and then report back in terms of the report, and it is very clear what exactly are the procedures that have been done, how many samples that we select, that can be also specified in the agreed upon procedure, and what are our findings. Those are clearly specified in the report. So that could be very well done for companies that you don't really want to rely on controls, or asking them to put controls in place may not, the cost of doing that may be too high. On the other extreme, where you have grants that are more ongoing, right? I'm quite sure, some of the grants are ongoing. For example, for anchor operator in the MSF scenario, right? Those are anchor operator that will operate for the long run, and the grant will be, a perpetual grant. Or even in the case of, for in the sports industry, where you have a national, NSA, where there are all the sporting, national sporting agencies in charge of each of the sports. So those grants will probably be more perpetual type of grant, you can't just withdraw it, right? It's permanent. So for those type of grant, it may be more appropriate for the grantee to have proper internal controls in place, right? Then there needs to be a different approach to those type of grants versus, the one-off grants. So I think the difficulties has two parts. One is the part around establishing what is the right engagement, what are the type of procedures. I think that is at the start of it. Once you launch the grant, that is where you need to have that discussion and that put in place. And also a roadmap as to what you want to achieve in the longer term. Then the second part of it will deal with the execution part. If the engagement selected is not appropriate, definitely the execution part will be a challenge, because if you want assurance over the control, but the grantee doesn't have a control in place, you will end up with a modified report which does not serve, may or may not serve your purpose. Yeah, I hope.
Yeah, thanks, Yen San. I think there's sort of a clarification to this question. I think it mentioned that the objective of this question is more to see how should government grant agencies do to improve their governance in grant administration. So I guess I think it still sort of boils down to what Yen San has mentioned. For example, in an AUP engagement, right, because we report factual findings, basically the government agencies can also have a tracking mechanism to see what are these common findings and see how you can endow it into your overall strategies in terms of tracking and managing these grants, right? So I think the good thing about AUP engagement is that because the upfront the
procedures are actually agreed upfront. We know what is important to you and we execute according to what is important to you, and the findings are also factually reported to you. So it also helps in terms of how you can basically track and administrate these findings and maybe incorporate it in your overall, strategies in terms of giving grants to the grantees, and what are the things that you want the grantees to be able to keep proper records. Okay, so hope we have answered this question.
Richie,
Yeah.
I have a question from the participant.
Okay.
Hi, thank you. Good morning to you from LTA. I have a question. Not sure whether it's a burning question among the audience. Sometimes as grantor, as part of grant condition, they may require the grantee to get themselves certified audited, like we were talking about, right? AUP limited. So in the event that this is a condition as a prerequisite for claim reimbursement, for example, and there's already arrangement to get the grantee to get themselves certified audited. So if that is already done, then does the grantor have the obligation to recheck the claims, etc.? Because that part of the work has already been included as a contractual prerequisite, that the grantee has to get an external party to get the things checked. You get the gist of what I'm saying. I think there was a recent AGO finding on it, which is I'm bringing it up with you. So if we have made that a condition, do we have to check it again? That's my short question. Can we rely on the paid services of it's a bit of a sensitive question, I understand, but I think it's a necessary clarification. Thanks a lot.
Maybe I try to answer this question first. I mean, the fact is that you rely on an external practitioner report, right, who provided either, I'm not sure whether it's a limited assurance or a reasonable assurance report or even an AUP report. I think the things that you probably need to do is firstly to read the report and see whether there's any exceptions or findings in that report. And if the practitioners come back and say that, there are no exceptions noted, right, and no findings to be reported, I think you can actually rely on that report. But of course, it usually comes with a statement. And you probably also want to make sure that, the whatever is included in that statement, is there any it's just like doing a review, right? I mean from a grantor perspective, to see whether there's any information that is really inconsistent with what you see in the auditor's report, right? So to have some, probably you may want to consider to have some due diligence procedures that's being done, right? To make sure that the statement and the auditor's report does make sense, overall make sense for you to rely. I mean, that's what I was thinking.
I think actually you can assume that when we receive the report, there will be some review to make sure that there are no adverse opinion or anything that's worthy of attention. So in the event that it is actually a fairly clean report, nothing adversarial, so I would say it's reasonable to say that as the grantor, we will not be overly skeptical of what is being checked, and in a way through a paid service, right, that we can rely on it, and there's no need for us to duplicate effort, right?
Yen-san, you want to say something?
So maybe let me just try to understand try to unpack a bit about the scenario. So I think I get it that the grant offer letter or the offer to the grantee includes a condition that the claims needs to be audited, right? So I think that's a good starting point, because when they submit the claim, there's audited reports coming with it. I think the question lies with what is the scope of the audit, whether the scope of the audit is what you intend. Because if your offer letter is not clear, then again it is judgment call, or it is up to the grantee to discuss with their practitioner or their service provider as to what is the scope of their audit, right? And secondly is who is the service provider, right? Have you specified qualified, competent service provider to do the audit, or is it anybody can do the audit? So that's the second question. I think it's more the governance around, when you say the audit, who do the audit? It must be qualified, certified individuals that can provide an audit up to a certain level of assurance. Of course, like public accountant like us, we are regulated by
ACRA, right? So each of us, we are all the 4 firms here. We have a system of internal control. We get audited by ACRA as well, So, each of us are licensed accountant. But if you don't specify who you want to do the audit, they can employ anybody to do the audit, right? So maybe you need to think about whether your offer letter is it clear around who you want to do the audit. Even for valuers, let's say in the risk industry, for valuers, they will want external qualified valuers. They will have a certain bar, right, to get somebody to do that, not any other valuer out there, right? Anybody can do an audit if you want to, right? But the question is whether that person who is doing it is suitably qualified, have the professional experience, have the objectivity and independence to do a good job, right, that you can then rely upon, right? And in terms of follow-up, the question is that, if the claims come in without audit report, whether you need to follow up, I think that part, I think you can't say that you don't follow up to make sure that the audit report come in. I think, having to review the audit report is probably also important because, as a practitioner like us, we report in the report. We don't, other than that, our service is concluded by issuing a report, right? But thereafter, anything from the report is probably more for the grantor to decide what's next to do with the report that they receive on hand.
I think, I'm sure they will look for not those fly by night. You'll be quite legit firm. But I think I can link back, thanks for that clarification, to the earlier sharing that it's important to be clear about the scope, right? What is considered, what will meet my objectives. So I think when engaging the external party, the grantor should require the grantee at least there's some alignment and clarification as to what will meet their needs so that the scope is comprehensive and addresses the grantor's requirement. I think that is fair. I mean, that ties back to the earlier sharing, right? Don't be ambiguous. What is compliant to me may not be compliant to you. Yeah. But I gather that it is spelled out clearly, the needs are spelled clearly, and it's actually a reasonably professional firm. And the report has been scrutinized and reviewed, and there's no alarming information, whatnot. Then it's fair to say that we have discharged our obligation as a grantor, right? Without the need to be overly skeptical and to recheck and everything, right? Because that arrangement to audit with clear objective has been reached. Something like that, right? Very nice. Sorry if I take out time.
Maybe I'll just address that, I can't say so much in terms of what due care has been placed on the grantor or on the agency because that comes from the government, right? Because how much due care that you need to exercise. I'll just give you an example. For us, sometimes we sit on boards as directors, and many of our professional accountants sit on boards as director, right? So as director, they also have this question. My external auditor already audited financial statement. Can I just rely on it and say that I'm done? So unfortunately, when we go to the act and the law, directors are still ultimately responsible, right? So I think the question is whether have they exercised due care and discharge their fiduciary duty. In terms of exercising due care, I think at least under the Companies Act, directors are allowed to rely on professionals, but of course they still have to ask appropriate questions and make sure that they discharge their duty. So if they have done that, then of course the due care has been exercised. Typically, you go to extent. So to answer your question, I don't really have a direct answer to you because I think number one is what is the maybe AGO or the government imposing on the agency, what's the responsibility and the level of due care that you need to exercise. And then secondly, of course, exercising due care sometimes is not clear cut, right? Just like, when we go to as a directors, it all depends on case law and what you do to support your case. So I think that is the second part that you need to think about. Yeah.
Okay, go to the next question. I think the next question is quite easy. Will the slides be shared, Zhu Mei? Okay, so I answered that. Okay, the other one is how do grantors assess the sufficient of work done by the service provider or vendor, or do we have to rely on their professional judgment? I think we sort of answered a bit of that in the first question, in just now that question. So of course, there is depending on what kind of reports that you are getting, right? And I think each agency also have different procedures that you need to do in terms of due care or due diligence that needs to be performed other than just relying on that report. So I think hopefully we have answered this question in the previous question that
that we were discussing. But if I so I'll take it as answered, but if there's any further questions that you all want to ask on this, I think feel free to ask. It's quite a small group here. Hopefully we have addressed those questions. The other one that was asked was, what are the pros and cons of using limited assurance versus outright full audit? And are there parameters or threshold where one is recommended over another? Right, so I think one of the evaluation will definitely be cost and benefit, right? We all know that because there are different types of assurance level. So a reasonable assurance engagement will definitely be more costly than where an engagement whereby you don't require auditors to exercise judgment and provide more assurance. That's number one. Right? And secondly, I think the other things there are also a lot other consideration on what are the expectation of the intended user of the engagement, right? For you to evaluate what kind of reports you want. Yeah, so I'm not sure whether any of our panelists here wants to add on. What are the pros and cons that each of the agencies would want to consider? So far, I think really depends on. I think Eileen also mentioned a bit earlier, right? A lot depends on how complex the engagement is, and also the how big the grant amount is as well. It could be some of your consideration as well. Yeah, Halima, you have anything to add on?
I saw that the question specifically focuses on the full audits versus limited assurance one. So AUPs is not in that scope. So clearly assurance is being sought. An example that, visually that Eileen was sharing, right? Literally in the air, if you have a spectrum, then on the one end, if you have negative assurance, which is limited assurance, versus a full scope audit, which will be reasonable assurance. Really, the difference can be in anywhere of nature, extent, timing of the procedures, really, anywhere in there. At a bare minimum, it's enquiries and analytics, at a bare minimum, if it's limited assurance. Think about it. Are you happy with the practitioner doing that bare minimum? Enquiries of the client, right, regarding certain criteria being met and providing that limited assurance conclusion. Or would you think that, no, that's not sufficient? I think there needs to be something more confidence providing than that. I don't think enquiries alone would be sufficient or analytics alone would be sufficient. I want them to be thinking about considering the need to vouch to source documents, trace to source documents, see evidence for themselves, right? And that would move more towards a reasonable assurance type of opinion. And when that happens, that would be like a full scope audit, right? So what it means to provide a reasonable assurance conclusion is whatever that needs to be performed to get there, the auditor has to do. There is no limit, right? So if the risk of material misstatement is high in specific areas, the extent of procedures can be quite high, may even be 100% in some situations, all right? So it depends on the level of assurance you would need as grantors that you see from the reports that are provided by the practitioners. Obviously, there's a cost attached to it, right? We've had engaging discussions with some of the government agencies in the past where they say, best, I want reasonable assurance conclusion, but I don't want to penalize so much in terms of cost by the grant recipients. The fees and everything will be high, right? So there has to be a balance, right? So on your part, as grant providers, right, you might be thinking about the amount involved, right? The risks involved of grant recipients not meeting those conditions. Is that high? Okay. What about your own organization's risk management framework, right? How risk tolerant is the organization? Think about that. That too could influence the amount of assurance you want to get out of the practitioner's report, right? So in a very simple way of analogizing it, a full scope audit is like an audit of financial statements, right? A full scope audit of the expenses associated with a particular project, for example, is like a financial statement audit. The procedures are not prescribed, but whatever the auditor needs to do has to be done by the auditor and be performed to provide that opinion. I hope that helps, but I'm wondering whether any of my other panel members have anything to add to that?
If not, I move on to the next question. How does limited assurance, enquiries and interviews only differs from getting grantee to issue a statement of confirmation, which can be done without involvement of an external auditor, right? So I think maybe I'll try to attempt to answer this question. When an auditor's issued a limited assurance engagement auditor's report, the auditors does form a view, although it's a negative assurance, right? So there is some assurance from the auditor, and the auditor is an independent party. So it's a bit different from just getting the grantee to actually confirm to you directly, right? So you are getting, and there is auditing standards. We actually apply auditing standards, requirements in auditing standards in order for us to come with a limited assurance report. So there's some form of assurance that you'll be getting, which is why even compared to an AUP report, it is quite different. There is requirement of auditors to form some professional judgment on that. Okay. You want to add on, Angeline?
Maybe just to add on a bit in terms of the limited assurance and chipping into what Alima has said. Now, limited assurance is a spectrum, right? So, inquiries, analytics will be, maybe we would say, the bare minimum. Now, generally, under our assurance framework, inquiries alone will not be sufficient evidence. So we cannot conduct an assurance engagement based on inquiries alone. It will be coupled with other procedure, analytics, or more inspection, observation, etc. So I think that is something that I thought we should clarify. And the other thing that, maybe I didn't cover in my presentation earlier is that because limited assurance engagements is a very wide spectrum of procedures that can be performed, right? It can be from inquiries to analytics plus more, right? Generally, in the assurance report, we would, go into a bit more detail under the auditor's or practitioner's responsibility paragraph to go into a bit more detail as to what the practitioner has performed to come to that limited assurance conclusion so that there will be some form of clarity to the intended users and grantors as well. For example, if there was some observation of assets, that could be actually spelled out in the report. Yeah, I hope that also helps to address a bit of the comments. Yeah.
Thanks, Angela. Okay, the next question that we have is, does any of these engagements, AUP assurance, requires the practitioners to look out for fraud? Example, forged supporting documents, right? So maybe I will start first. The auditing standards does not require us to actively look for fraud, right? And look for forged documents. But if we come across any of the documents as auditors that we suspect the documents are forged, we as auditors have to perform additional procedures, right? In order for us to be satisfied, right? So I think that is actually in the auditing standards. Halima?
Yeah. If I might just add, we'd also have a code of ethics as public accountants to abide by, right? And under that code, if we do come across anything irregular that is in the course of our work, right, we have a duty to report to those charged with governance of that organization. So that is something that definitely, you can say that the code already requires that of the public accountants. And as, Wee Ching mentioned as well, in the course of our audit, we also have a consideration of fraud, right? Risk of material misstatements arising from fraud. Now, if any of those relate to the potentials of, underlying documents, that would be a consideration, but it's not an active activity. We're not forensic scientists ourselves, all right? So I just wanted to also clarify in terms of expectations.
Okay, thanks, Halima. The other question that I have here is AUP engagement performed by the assurance or risk advisory unit
of the accounting firms?
In terms of the work-wise, I think you're asking about AUP, is it?
Yeah, AUP engagement.
Also sometimes, for big firms, it also depends on what is the matter that is being subject to the procedures. Sometimes we may involve our specialists, right, in certain areas where require specialist knowledge in the subject matter. So, as part and parcel of the carrying out our work, we may involve our advisory colleague with specialized knowledge in certain areas to assist with the performance of the procedures. So, in terms of the signing of the report, I think it may be preferable if you looking from the governance perspective, if you are concerned with who is performing the work, to be specified clearly in the offer letter who you want to be the one responsible for the issuance of the report. For example, if you require a public accountant license by ACRA, you specify that. Right, that will, of course, make it very clear. Like, for example, for statutory audit under the Companies Act, it's very clear that it can only be carried out by public accountants that are registered with ACRA.
Okay, then I think there's another question. Is it possible for auditors to disclose the procedures performed for assurance engagement if grantors required? Right, so not sure whether anyone in the panel wants to answer this question, but usually even for assurance engagement with our clients, we don't actually share our procedures because a lot depends. We perform our work based on the auditing standards. And there are a lot of things that the auditors consider and have to exercise professional judgment, right, in terms of the nature, the extent, and the timing of the procedures that needs to be performed. And that is done after we have we have done a risk assessment, we understand the company's controls, things like that. So usually we don't really share our procedures because there's a lot of judgment involved, and also from a risk management perspective as well. So if this is an upfront requirement by the grantors, I think it's something that needs to be mentioned upfront, because we usually will need to mention that in the engagement letter, and that has to go through our risk management and legal counsel. And if it's something that we can't provide, then we may choose not to accept the engagement. Yeah. Okay, so the other thing that was mentioned here, it was mentioned earlier that description or authenticity of items claimed are valid by checking against appropriate supporting documents is vague. Can I ask how can this be improved? Yeah, I mean, I saw that statement. I think one of the things that I see is the authenticity. Definitely, we are not able to, authenticity is not easy to I don't think it's, it requires a lot of judgment to assess whether that document is authentic, right? I mean, because because to run every document through a tool, I mean, of course, there are tools available. It's not possible. So we have to the first thing is to inspect by eye, right? Or to evaluate. And that is a professional judgment, which definitely will not be done in the AUP. I mean, that's how I see it when I look at the statement. More on the authenticity, I think that is a problem. Okay. The other one is if we find there are auditors or practitioners not compliant with the standards when they issue reports, example, wrong finding reported, what should grantors do? And is there any organization to flag out to? I think everyone sees that in the... Okay, we are all... Okay, so firstly, if the practitioners is registered with, we are registered with ACRA, and we are also a ISCA member, right? I think ISCA, there are different committees. I think one of the committees is regards to disciplinary committee of members, right? So of course there will be organization that you can flag out to if you are unhappy with the work. I guess the other thing is that so the other one is wrong findings reported. I think from a grantee's perspective, I think it's also to reassess. I mean, you probably have to reach out to from the grantor perspective, you have to reach out to grantees to see whether is that is that a fraudulent reporting, or is it oversight, right? I think we do see instances whereby agencies ask they evaluate is a pure oversight by the grantees, and they get the grantees to resubmit and get it re-audited, right? So I think that we do see, like what Angela says, there's also a spectrum of errors that we noted. Yeah, some of it could be a oversight. Yeah. So yeah.
I'm in the discount auditing and assurance subgroup, but I'm also in the government agencies. So to that point, right, about if in the course of your work you found any like possible wrongdoings by the auditors, what you can do is ACRA has a complaint and disciplinary process. Yeah. So any public or officer, you can file the report. Of course, you have to include your basis and your evidence, etc. And ACRA will conduct the complaint and disciplinary process. So that's a possible alternative if you are thinking of that.
Okay, thanks, So-Hoon. Wow, there are quite a lot of questions. I answer this question. How does the auditor check if the declared time spent on a project is accurate, given that the project has been completed, right? So maybe I'll just try to attempt the question. I think Yen San did mention that a lot of times, right, we look at whether the company maintain proper records. Even if the project has been completed, there will still have been timesheets, right, that has been charged to that project. So we are inspecting evidence, right, in terms of the time charged to those projects. And under the Companies Act, they are required. Company is supposed to keep records, accounting records, and so we do have records that we can verify too. But of course, so the record keeping of the company is actually is pretty important, and making sure that's why as auditor, right, the first thing when we accept an engagement, right, is to assess whether the company has proper controls in terms of recording, because if they don't have proper records, there's no way we can complete the engagement, right? Which is why sometimes you find that usually it's easier for the statutory auditors to perform those engagement, because they already know the company's control environment. And so it becomes easier for them, because some of it they could have done it as part of their understanding in their statutory audit. So they rely on some of the background knowledge, to perform the AUP or this specific purpose audit engagements, right? So from a cost perspective, and also from an efficiency perspective, sometimes the statutory auditors may be in a better position to do those engagements. Okay, so let me see. Okay, is the structuring of the reasonable limited assurance engagement solely up to the auditors? How should the criteria or scope be structured or communicated? Okay, this is a very technical question, so I'll defer to Angela since whether you want to attempt to answer this question. Yeah.
Yeah, sure. Okay, so in terms of whether it's limited or reasonable, I would say that would be really driven by the grantor's requirements. And therefore, like what Yen San is saying, it has to be clearly spelled out in the award letter to the grantee as to what you kind of expect. But if you just use generic terms, like, get a practitioner to certify, this is where sometimes it gets into a little bit of ambiguity, because what does certification mean, right? So then that might end up leaving it to the grantee to decide, and then cost considerations may then come in. So if the grantor expects reasonable assurance or limited, we would really recommend that to be clearly spelled out. And because the intended user, you are the users of the report, so you would be able to decide the level of assurance that you require, right? It will only be left to the grantee and the practitioner if it was not clear, and the grantor does not have any preference sometimes, then it might be left to the grantees and practitioners to decide. Then if, for example, the grantor has said, okay, I want a reasonable assurance, right? the practitioners will do the necessary under our assurance standard to arrive at that reasonable assurance. I mentioned earlier all the suite of procedures based on our risk assessment, etc., we will do the necessary. When it comes to limited, then that again will be a spectrum, but definitely the work performed will be of a lesser extent than in a reasonable assurance engagement. Yeah, so I hope that kind of addresses this question. Okay, anything else to add?
So I think in practice, it requires all three parties to discuss and agree on what would be the most appropriate type of engagement, because there's a few considerations, right? Cost is one consideration. Cost will also impact how much they can pay the auditor, and also the effort that can be expended by the auditor. Then at the same time, also from the grantee perspective, what can they practically provide and at what level they are at. So it will probably be a three-party discussion around what would be the right type of engagement for the specific circumstances. And it may not be static. Once you have that, you probably want to think about a roadmap to move them to a different place as time goes by, as they become more mature in the process. So I would say that it's not, theoretically speaking, it's a grantor decision, right? Because being the grantor, you have all right and say to decide what is in your terms and conditions. But practically, there's also stakeholders' consideration around what the grantee can do, what the auditors can do. So I think practically it will be, probably has to be discussed among the three parties.
Thanks, Sainsan. Okay, another question, where can I get help to draft proper or appropriate procedures for AUP? Maybe I get, Halima is in AGS 1 subcommittee, right? Maybe you want to answer this question.
Yeah, certainly. So if you're wanting the grantees to get an agreed upon procedures engagement and have the practitioner provide the findings report, right? Typically the work needs to comply with a standard, right? SSRS 4400. And that standard actually prescribes certain ground rules around how procedures need to be worded, right? For example, they have to be unambiguous and so forth. So some of the terms that you saw on the slide earlier during Elaine's presentation, right, were actually from the standard. Now, of course, there's a straightforward example available, right? In fact, a few examples. When you look at AGS 1 in Appendix 5, there are 3 examples of AUP reports in there, right? That could also be a starting point, right? As I was answering an earlier question, I mentioned that, often consider about tailoring the procedures to your specific needs. Sometimes those suggested procedures there may not be sufficient from your perspective, right? You may have to modify some of them to make clear, more specific to the particular grant that you are managing. All right, so consider that as well. That would be my suggestion.
Yeah. So Halima, I have a follow-up question from you since you are in the AGS 1 subcommittee. Can you provide guidance on how we can word AUP procedure to ensure that accrued expenses in a financial year are actually paid out in cash?
Okay, so tracing to source documents, right? So picking up the specific supporting documents and tracing to source documents when payments are actually made out. Some of these source documents that will be, evidencing the payouts could be the authorized payment vouchers, tracing to bank statements and subsequent clearance, etc. Right? These needs to be made very clear. Now, in some situations, we've seen procedures that are suggested by the grantors, maybe around inquiring that payments have been made. Now, eventually, if it's about inquiring and just getting a response in there, I'm not sure there's a lot of value add to that, because it simply would be a management's response, right? So consider what kind of evidence would you have had yourselves desired to achieve, right? And then consider that and put it into that procedure. All right, so that would be my suggestion.
Okay.
Thank you, Chairman of ASA, AGS 1 Subcommittee.
AGS 1 subcommittee, the members do most of the work. Okay, do have another question here. Any advice on how grantors can stipulate a combination of using assurance and AUP engagements to balance grantors' objective of focus areas and also grantees' cost consideration or extent of work? I'm not sure whether...
I want to take that question.
You want to take that question? Okay, great.
While I'm on a roll, but I would,
Okay.
please,
Yeah.
approach you for additional comments. Now, an AUP and engagement and an assurance engagement are two very different engagements. Okay, one is assurance, one is no assurance. Really, they are very, very. It's comparing apples and oranges. One could be sweet and sour, one could be crunchy, one could be juicy, one may be juicy but in a different way, emphatic, and so forth, right? Very different stuff. So from a practical perspective and to avoid potential confusion to the reader of the reports, we would actually not encourage the two to be put together in one engagement, but they could be structured as two parts, Part A and Part B, or Part 1 and Part 2, and so forth, right? So that your objectives are actually very clear. What is it you want to focus on? What is it that you want to have a say in terms of the nature, extent, and timing of procedures, right? A very common procedure around tracing to source documents for expenditures made, right? I want 85% coverage, okay, because this is like a lot of risk associated. For example, you want to have a say in it. When that is the case, you're driving more towards an AUP engagement. There may be other aspects of the grant management where you want assurance, right? Where you would not want to necessarily control the extent of the procedures, the nature of it, extent of it, and so forth. Then in those situations, maybe an assurance engagement may be crafted out. It is possible to structure them in two parts of an engagement. Would Yen-san or anyone in the panel want to add on anything?
Are there procedures, is there an engagement in which test of controls is done with no assurance given?
So in a test of controls, typically we are looking at assurance, I believe, because you want to make sure that the controls meet the control objectives, right? So you can if you wanted to, but then that would mean a lot of upfront investment in understanding the control design, both on the part of the grantor and the grantee and the practitioner, right? A very, very clear understanding of the control before we can even, or you could work with the grantor or grantee to design a procedure. It might be a bit tough, but I'm not saying it's going to be impossible. Yeah.
So it can still be worded within the confines of SSRS 4400?
If you can cover nature, extent, timing with those rules, yes.
Okay.
Okay, you might say, describe the specific control and pull out aspects of it. It is possible. It's not impossible, but it's going to require a lot more investment on your part as grantors.
Okay, the next question is, the public agencies are getting grant intermediaries to administer our programs. The challenge is also to ensure all three parties are fully aware, agree, and align on the information or records to keep. Yeah, I'm not sure whether it's a question or is it a statement.
It's an observation.
Or is it an observation? But I'm not sure any one of the... Do you all want to... Anyone to... I assume it's a statement. But it's a good observation as well. Yeah. Okay, so actually I think we are quite good. We pretty much answer a lot of the questions already. But if I miss out anything, you can let me know. But yeah, it looks like we have answered a fair bit of the questions.
Can I just ask?
Yeah.
I'm just wondering, say I have a very specific parameter that I want to check. Because I have a very specific parameter like AUP, would it still be possible to go by the reasonable or limited assurance route? So for example, I want very specific check that A matches with B, for example. But I want to have assurance that is done, let's say, for a very big population, for example. So can I go by a reasonable assurance route, or I have to go by AUP and then specify all the extent and how it should be done?
And Yen-san, you want to try to answer this question?
The answer, as as a accounting firm, we say that depends on what you want, we can structure. So, but back to your point, right? I mean, that aside, right? So if you want to cover a specific population and it's just A equal to B or A plus B, then perhaps it's easier for you to spell that out as an agreed upon procedure. Then you can straight away specify what is the number of samples that you want to ask to cover, and also, you know, what exactly you want us to check.
Yeah, I think I sort of echo Yen-san's point. The fact about AUP is that you can actually specify the coverage as well. You know, when you leave it to an assurance engagement, right, pretty much it's also the auditor's professional judgment, right? It may not be, I mean, if you are comfortable, if you want them to do 100%, maybe an AUP engagement maybe works better, right? So that it's very clear to them that you need them to do 100%. And once they find any exceptions, they will report everything to you, right? Versus an assurance engagement, you may not have full visibility of the procedures that was performed. I think, yeah.
Colleagues, some of the time,
Okay.
so actually we overrun by quite a bit.
Oh,
So
yeah.
if there are any questions that the panelists have not addressed, we will take them offline separately, and then write to the participants on the answers to those questions. If you guys are free after the session, you can also stay behind and engage privately with
Thank you, everyone. I think we are too excited answering all the questions and lose track of time. But thank you for all the participation.
So thank you very much, everyone, for attending today's session. The agents fund that was mentioned by the speakers, you can access it through the link here. So that audit guidance statement contains the sample reports that were mentioned during the session. Thank you.